You've heard of Bitcoin. You've heard of Ethereum. But there's one project flying under the radar, and it's backed by some of the biggest names in tech. It's fast. It's scalable. And it's called Hedera Hashgraph, or just HBAR. Here's why more and more traders are watching it closely. And why missing this could be one of the biggest mistakes of this entire cycle. Right now, the headlines are all about Bitcoin breaking new resistance and Ethereum gaining serious momentum. But quietly, in the background, something even more significant is happening, and very few are paying attention. HBAR isn't trending on Twitter. It's not the subject of viral TikToks. But while retail traders are distracted by noise, a wave of institutional momentum is quietly building behind this project. And when you see why, you'll understand. HBAR isn't a hype play, it's a foundation bet. Hedera Hashgraph isn't just another blockchain. In fact, it's not a blockchain at all. It uses a technology called the Hashgraph consensus algorithm, which allows it to reach finality on transactions in seconds, without compromising decentralization or security. This means Hedera can process more than 10,000 transactions per second, with extremely low fees and virtually no energy waste. Compared to Bitcoin's 7 transactions per second and Ethereum's occasional network congestion, Hedera is designed for true scale. And it's not just a theoretical promise, it's running live. Right now. With real use cases. And here's where it gets even more interesting. Hedera is governed not by a small group of insiders, but by a council of 39 global giants. We're talking about companies like Google, IBM, Boeing, LG, Dell, and even Deutsche Telekom. These aren't just partners. These are governing nodes, actively participating in securing and guiding the network. If HBAR has had this technology and support for years, why is it suddenly drawing attention now? Over the past few months, the groundwork has been laid quietly. Partnership announcements haven't gone viral. Trading volumes have stayed modest. But when you look at on-chain metrics, you'll notice something critical. Large wallets, the so-called smart money, have been consistently accumulating HBAR, even during price corrections. They're not betting on a quick pump. They're positioning for something much larger, something tied to regulation, infrastructure, and long-term utility. Let's talk about what's actually happening. Hedera is making serious strides in bringing tokenization to the mainstream. Its native token service now allows institutions to issue digital representations of real-world assets, from real estate to supply chain tokens to financial instruments. That's not just innovation, that's real economic utility. Recently, Hedera announced a partnership with PayPro Global, integrating seamless B2B payment infrastructure. This could significantly increase transaction volume and open the doors for enterprise-level adoption. Meanwhile, Hedera is working with Dell Technologies to bring decentralized trust to edge computing, the systems that power smart cities and autonomous devices. All of this is happening now, not someday in the future. And environmentally? Hedera remains one of the most energy-efficient DLTs in the world, something that is becoming increasingly important as ESG requirements tighten across industries. All of this would already make Hedera worth watching. But what's happening on the regulatory front changes the entire game. For years, regulation has been crypto's greatest uncertainty. But that's no longer the case. In July 2025, the US passed 3 landmark crypto bills, the Clarity Act, the Genius Act, and the Anti-CBDC Bill. Together, these pieces of legislation have provided long-awaited clarity, especially for utility-based tokens like HBAR. And the result? Institutional capital, once held back by legal risk, is now flowing in at an unprecedented pace. And if all of this sounds familiar, it should. We've seen this same setup before, with XRP. Utility token. Long legal battle. Regulatory clarity. Then a massive rally. Now XRP is leading the market, and HBAR might be next. Both projects solve real problems. Both offer enterprise-grade infrastructure. And both are benefiting directly from clearer US regulation. But HBAR has one more thing: it's still early. Most traders haven't caught on yet. That's the opportunity. Zoom out for a second. The crypto market is entering a fresh bull cycle. Bitcoin dominance is high, but altcoins are starting to heat up. When capital rotates, it moves fast. And the projects that are already solving real problems? They move first, and fastest. This isn't just another altcoin run. This is a structural shift in the crypto landscape. HBAR is built for utility. Governed by giants. Powered by speed, scale, and sustainability. And finally, the market is waking up. If you're tired of meme coins and empty promises. If you're looking for a project with a real chance of mass adoption. Then HBAR might be the most important asset you're not yet holding. If this got your attention, do one thing right now. Go do your own research on Hedera Hashgraph. Check the partnerships. Follow the on-chain data. And if it all checks out, consider whether this is the moment to act, before the rest of the market catches up. Smash that like button if you're watching HBAR. Drop a comment if you think it's still undervalued. And don't forget to subscribe, because we're tracking every shift in this crypto cycle.